have been in these conversations at the Fed, and I'd like you to take us behind the closed doors as more of the governors seem to be saying interest rate hikes should or will come sooner. What is the conversation like? What's the back and forth like?
Well, actually, the dots were very interesting. 11 said no hike in 2023. Only one said one hike. But 5 said 3 or 4 hikes. Oh, the FOMC meetings are going to be very, very interesting. And I think the story here is that the story is still that while the economy is better, stronger, there's still a long way to go to get to their goals. And that's basically the story to make the no hike this time consistent with the forecast. And I think another thing is that they don't forecast 2024. So what would Powell say? I think they were thinking there was going to be an overshoot there. They didn't forecast it. I think that held them back a little bit. So yeah, I think there's a little bit more danger that they go too slow. And one of the main reasons is that they are constrained from moving away from zero until inflation is 2% for a year, and they believe it's going to overshoot. They've never kept the funds rate unchanged under those circumstances. I mean, that's remarkable, and that's the new guidance. It's supposed to be sufficiently accommodative that you get inflation up to 2% and you do overshoot. So that means that
and you leave interest rates where they are, right, Larry? Mm-hmm. And you leave them right where they are, despite that it may overshoot that goal.
Right. So we're talking about 2023. Yes. So keep them the same until it's at 2% for a year, and they expect it to overshoot in the following years. So,
Larry,
yeah, go ahead.
Continue your thought, Larry.
So this is not at all a surprise, and it doesn't tell us very much about whether they're going to go too fast or too slow. So we'll have to see. 2023 is a long way off. As the chair always likes to say, the crystal ball is very cloudy out there. Don't pay too much attention to those dots in 2023. And he's right. The forecast is wrong. We know that. It's always wrong. And we shouldn't pay all that much attention to it. It does give some perspective on what the individual members are thinking.
What about a taper timeline? Is it still appropriate for the Fed to be making the purchases at the level at which they are and for the foreseeable future? When does Powell need to begin to forecast that a little bit more clearly for the markets?
Well, it's certainly not for the foreseeable future, because they can see about when they're going to need to taper. It's when there's significant progress. Very vague. It's in the eyes of the beholder. There'll be a lot of interesting discussion within the committee. So I think that if you look at them and they have a 4.5% unemployment rate at the end of this year, I think that's not quite low enough. I think it's going to have to be closer to 4.25%, what we expected, like 4.2%. And inflation at least 2%. So I think that's it's probably beyond this year, in the first quarter or most second quarter of next year.
So one quick question before we have to leave you. Did I hear you correctly then that you think that the earliest they will begin tapering those asset purchases is next year, and when might they start to signal that?
No, the earliest is December, and we were at December. But their forecast suggests to me that it's more likely to be in early next year.
All right, Governor Meyer, thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.